Hello, everyone. This is another episode of Finally Friday. Sorry for the latest inconsistency in the podcasts. I always apologize and I always try to explain that I don't always have the time. But this time it was simply because I was searching for a better mic and it had to come with a lot of equipment. So I hooked up a new mic to my computer. I hope the sound quality on this one is better than the previous ones. I know that it's not going to be tremendously better, but every single increment of quality helps out and it helps the clarity. So I went through quite the experience in buying this mic. It was very interesting to go through this experience. I'm not going to mention the name of the company that I bought it from or the brand because it's really irrelevant, but it's a higher quality brand, and I went with a website that is known for their audio and equipment and everything else. And so I got all the equipment, hooked it up right, and it just didn't work. So I called technical support, and I got this guy on technical support. He was a very nice guy, by the way. Very knowledgeable, but slightly arrogant because he was convinced that I'm doing something wrong. And I tried to tell him that, I'm not exactly tech illiterate. I actually do things right. I work with platforms. I told him I'm a broker. I work with data. I work with software. So, it doesn't make me a software engineer, but I know how to hook up stuff, right? Pretty much connecting a USB to a computer and a few other cables. And I told him that, the mic is not working. His response was, well, it's impossible. It's a high quality mic. I said, it could be a high quality mic when it's working, but it's worthless right now because it's not working. Against his better judgment and using my intuition, I decided to return it and they sent me a new mic that I was waiting for. My last podcast had those noise interruptions because I used a different mic, and I didn't pay attention to the interruptions when I was listening to it. It came out, however, not of the best quality, and I apologize for this. But this whole thing, gave me kind of a insight how I'm the customer now, because we have many customers at Optimus Futures, and now I am the customer, and I'm a frustrated customer, right? But I didn't go nuts. We have customers who sometimes I would say 90% of them are reasonable. I would say 99% are reasonable, but there's always that one that is completely unreasonable. Well, I think every business experienced that, but essentially I was a reasonable guy, and the other side wasn't very reasonable. So give me an insight how not to treat customers and maybe give people the benefit of the doubt, even though they're not in the business itself, and as consumers, they still could be right, and I'm yet to learn something from them. So the technical support I encountered, if he had some sort of, an open mind, maybe he would also, give his customers a better choice. In any case, a better service. Well, in any case, just want to let you know that this mic is working. So I did hook up everything right. Today I'm going to talk about some leverage in trading. I know I mentioned it in many different colors, in many different angles. So, customers usually when they call us or they correspond with us, the two most important things to them is the cost of the transaction, and we try to provide reasonable cost of transaction relatively to the services and the help that we provide. And obviously they want some sort of a leverage because, everybody's advertising low, day trading leverage. And, we have to offer it because we also want to be in business. I'm not always in favor of every single person using the highest leverage possible, but I know that some people can use it, for example, to diversify portfolios so they can be in different markets, or sometimes they just feel they don't want to, maybe as a day trader, they don't want to put, a lot of money in their account as initial deposit. I tell them that the risk on it is still the same, regardless of the money that they use to put in the account, because they're liable for, anything they lose and beyond, which customers can lose if they're over leveraged. They can lose beyond their initial investment. But when I talk to beginners, I try to tell them not to over leverage. And over the years, I had this comment coming back from customers where they say, well, I still want it just in case. And I really did not understand what it means, just in case. Because from my perspective, and again, there's a certain way that I think, and every single customer that comes thinks in a unique way about his portfolio and how he wants to do things. And the customer is always right. When I say the customer is always right, it's not because he's right. It's not because he's just necessarily does the right thing for himself, but he's right because that's his money. So we have to respect that in the end of the day. What I try to do is to educate my customers as much as I can. This is the purpose of the podcast. So the customer, when he's right and when he makes decisions, he will make the right decisions. In any case, a lot of traders are attracted to high leverage, which means low day trading margins, smaller accounts, and they can grab more contracts to trade with. And that doesn't necessarily always end up in the favor of the customer. But over the years, that's what I've been hearing from many customers. Well, I know that I shouldn't over leverage, but I still want a low day trading margin just in case. And when something repeats itself, just in case, it means that everybody's thinking about the same thing. And I just couldn't figure out what it is. I mean, don't get me wrong, I didn't lose sleep over it at night, but I'm always curious as to customer needs because they change. I've been in the business many years, much more than I like to admit, but I started very young in this business, very young. I was in my early 20s and I started the actual trading business. So, and again, we're going back to, okay, we just in case. So then it kind of dawned on me what it means just in case. Just in case means that customers periodically think that they will be encountering a situation where the market is so overbought or so oversold that they will be able to grab, they should be able to grab, at least they want to grab as many future contracts as possible to capture that move. Okay? And that, in my opinion, is one of the biggest mistakes that they can do. Because you know what? This just in case, it was turning a trader to a gambler. And let me explain to you a number of things to those. I always repeat some things in podcasts, but I like to explain it to those who haven't been listening to all the podcasts. So basically, traders sometimes go on hunches. For example, they try to guess where is the bottom. So the market could be falling for 4 hours or 4 days. And then they get this intuition the market can fall from here. And at that point in time, they just go in and set and put a huge number of contracts. Well, when I say huge, it's all relatively according to your account size. And most of the time, this does not end up well for them. So that's one thing. And the other thing that I tell beginners is that you should not work on hunches. You do not have those super powers, those mental powers to determine where the market is going to bounce from just on intuition, or if the market has been going up for a very long time, like it's been doing now, that you have the ability to guess where the top is. So basically, the trait or the request, I should say, of just in case is really periodically turning yourself from a trader to a gambler and go all in and try to get that cash pot in the market. It's a bad thing to do. And further, if you are over leveraged or you still want that high leverage, even on a normal day, if you're losing money and then you try to recover your loss. I know a lot of people call it revenge trading, but every time I say revenge trading, it's just thinking about, somebody who's just lost his mind. And most people, when they trade, they're just a click of a button, right? They don't lose their mind. They're just temporarily loss of discipline, where they lost with one contract throughout the day, but they say, you know what, I lost so much, I'm going to try and recover it with 4 contracts, and then they lose even more. And it was the worst thing that they did. So this sentence of just in case is the ability, they want the ability to recognize patterns, so they can go and basically go for the kill, as we say, or the ability to recover money fast. So now, when first of all, now I know what they mean by this sentence. And I actually explained to them why it's not the best thing to do. Your trading size should be reasonable relatively to your risk tolerance, relatively to your understanding of the market, relatively to your experience. I cannot tell you how to leverage your account. I cannot tell you how many contracts you should trade, but I would say that as you trade, go with the number of contracts that is consistent and you can operate in, and it doesn't mess up your psychology when you trade. And when it messes up your psychology or you can't handle it. And beginners should trade, less contracts. I'm not saying that advanced traders should just go exponential on the number of contracts, but clearly people with more experience could potentially, use more, again, if their risk tolerance allows. And you know what? If it doesn't allow, it's fine to trade all of your life with a fixed number of contracts that you decided that is reasonable for you. There is just absolutely nothing wrong with that. Do not feel that part of growth as a trader is always increasing the size that you trade. It is not. Your goal is to increase your knowledge. Your goal is to review more in the markets. Your goal is to make sure that your risk management gets better and better and better. Your review skills are getting better. Everything but size, really. I mean, I don't mean to say that you should not increase your size if you feel it's the right thing to do and you increased your account size. But certain number of contracts that you can trade in futures could potentially not suitable for your risk tolerance, regardless of your account size. Those people who are afraid to trade or they can't get started out of fear. It's not that those people are... it's not always the fear of losing money. It's just being in a state, I think, again, I'm not a psychologist, but, this is, since trading has to do so much with psychology, sometimes I try to figure out how people think. Sometimes I'm successful, sometimes I'm not. But I think the people that are afraid to trade, those perpetual demo users or people who do open a brokerage account but concerned with everything else because they're not ready or because they have to make their model better and just tweak it. But really it's an excuse because they're really afraid to trade and they're afraid of uncertainty, and so trading is really not for everyone. Not every single trading account out there trades. And some people don't trade at all. Some people trade a little bit. Some people trade a lot, which is fine. It is what it is. I always tell people, if trading is not for you, it's not for you. It's definitely not for everyone. And I'm not a broker for everyone. But there is nothing wrong, as I mentioned before, trading a certain size that you're comfortable with in a consistent manner where you basically make decisions that are suitable to your risk tolerance. So if you have X amount of dollars and you are trading one contract and you are a successful trader and you were trading now 2X contracts because your equity right now is 2x, but you're not seeing the same results, it's fine. Go back to 1x. Or maybe you went from 5x, to 10x, and even though your account went up, 5x or 10x, but you're not getting the same results after, and you're having a lot more losses, then start cutting it down. So again, avoid as much as possible the just-in-case mentality that some beginners have, or think that they, again, have some sort of psychic power to predict situations where they can go from 1 to 5 and make it. And if they did make it, even on that one transaction, that's probably the worst thing that they did for their nature, because they won, and they'll try to repeat it again. And the next time it doesn't work. And the people that lost swear to themselves that they'll never do it again. But since they did it, they break that rule, and they say, well, maybe this time it will work. So it's better not to go mentally into that territory from the first place. It's better not to experience it, right? And that's what it is. So let me just kind of tie it all up. And go back to what I was talking about, where people are afraid to trade. They can't even place one trade. And again, they have enough money in their account to trade, but they can't. They have fear. Okay, so the next level from that, I would say, are the people that stick to, let's say, one contract, and even though their account grew, when they go to 2 contracts, they're not experiencing the same results, or they experience some sort of a fear. Now, obviously, you don't want to go back to trading nothing and let fear paralyze you, like those people who are in a perpetual demo mode, or just stare at quotes and charts for hours and days and never take advantage of the market. And again, I don't judge them. I'm not judging anyone. Trading is not for everyone, and I know that. So there's a lot of people who are fascinated with trading. They're fascinated with the markets. They're fascinated with the software technology. And I always say that's just maybe 5% of trading. Loving the gadgets around it, and the platforms and the talks and the forums and even this podcast, it's just 5%. The 95% is really a lot of sweat equity. Trying really hard. But I'm all in favor, and I love people who take risks. I just want people to succeed and take reasonable risks. So again, the purpose of this podcast is not to put anybody down or to stop you from what you're doing. It's just to basically tell you, start acting consistently, start acting in a manner that is reasonable to your account size and your risk tolerance, and avoid the just-in-case syndrome. I'm going to take this opportunity just to remind everyone that there's a substantial risk of loss in futures trading. Past performance is not indicative of future results. As I mentioned, trading is not for everyone. I'd like to give a plug to my great staff at Optimus Futures that helps customers every day, my great brokers who help their customers. I'm working with a phenomenal team. So go to www.optimusfutures.com. You can call us 1-800-771-6748. If you want to use a local number, it's 561-367-8686. And try out our platform, Optimus Flow. Great platform, singular. Great features, excellent for beginners. Excellent for those who are trying the smaller contracts, the micros. Great platform for that. Gives you everything you need. Dome, charts, trading on the charts, great visual display. So I hope you try it out. That's basically it. I'll see you next week. I wish you a phenomenal weekend, and I appreciate your time, and thank you very much for listening. All the best, and good luck in your trades.